reach their financial goals. Bajaj Finance and Bajaj Finserv, or Bajaj twins as we famously call them every time we comment on them, maybe discuss them, they have been massive wealth creators. So is the journey just about at the beginning for Bajaj Finance? Will this great company become from great to a unforgettable company? So to take the conversation forward, I have with me none other than Sanjiv Bajaj of Bajaj Finserv and Bajaj Finance.
Thank you, Nikunj. Thank you for those kind words for Bajaj Finserv and Bajaj Finance. But really, today is the big day for ET Now. Congratulations on your 13th anniversary. And as you've said, whether it is our companies, whether it is ET Now, we know that this period of time signifies that great businesses are built over the long term. They are built with quality. They are built with a focus on costs as well. But more importantly, they're built with a complete focus on what customers of today and tomorrow want and what's the best possible manner for us to deliver it to them.
The world is going through an extraordinary challenge where interest rates will move higher, inflation is structurally high, the consumer demand so far robust but could get punctured. How would you assess the big picture for us? Because when we spoke to you last time, things were different both globally and locally. And now things have changed rather rapidly in less than 3 months.
Nikunj, let's look at this through three lenses. The first is the global lens. When you look at the global lens, what you're seeing is a period of significant uncertainty driven by the war, driven by COVID-related supply chain disruptions and COVID itself, which now seems to be under somewhat of control, but you never know, you could see a nasty surprise. But the supply chain disruptions continue to be true, especially given China's zero COVID policy as well. And keep in mind that many of these countries, Western countries, put in a lot of liquidity into the last 2 years, which countries like India could not afford to do. So you saw ballooning asset prices. As a result of that, those countries in their last 40 years have not seen the high level of inflation that they are seeing right now. Many hoped it was temporary, but they've realized it's not, and that's why you're seeing an accelerated rise in interest rates. In many of these countries, we've just heard the last rate hike, 75 bips by the Fed. And from what they've indicated, you'll probably see another 150 to 175 bips in this year itself, which means the West is telling us very strong focus to bring inflation down, and we are going to do what it requires for that. Now, our situation in India, if I look through the Indian lens, so let me look at the Indian lens of challenges. Again, we are in a period of high inflation. We have seen the RBI starting to act on this, and I believe that you will continue to see increases in interest rate as well. You've seen the government take initiatives as well to cut import duties where required, to put in export controls where required, so that our prices come down. We know to the common man, we know to the middle class customer, it's food prices, it's fuel prices, and to the middle class, probably home ownership prices, which need to be monitored. Let's hope that while the monsoon has started a little late, we still see a normal monsoon, which should bring down food prices. And I think it can help in reducing inflation by 50 to 75 basis points by what economists say. So that would be an important area for us to monitor, because unfortunately, fuel, there's not much we can do. The central government has already cut taxes. I hope state governments would do that as well, so that it provides relief to the common man. Our challenges continue with respect to supply chain disruptions as well, and the effects of war. So that's the second lens, our domestic challenges. The important is the third lens, which is the opportunity. See, keep in mind that in our case, we've not seen excessive leverage as a country the way the Western worlds have seen. So we don't have to go back to the kind of levels they need to. We have to keep inflation in check. Keep in mind that we have limited tools at our disposal, because a lot of this inflation is supply side led. It's not demand side led. And that's where a thoughtful balance will be required by the RBI, where they will cut some more or they will increase interest rates some more to bring demand down. But there's no point taking interest rates up so high that you bring demand down, but you don't impact inflation because it's supply side based. So that would be one thought in my mind. Beyond that, if we were to look at a year and a half down the line, the world is looking for an alternative to China as a manufacturing base, as a service base. And this next decade can be India's decade. It's a decade where, led by the PLI schemes, focusing on that, employment-led incentive schemes that we believe that the government should pursue, the revival of private sector capital investment, and the deleveraging already in the banking system which exists. A combination of these could actually give us our best decade yet ahead of us. So I do see short-term challenges, but I do see medium-term opportunities as well.
Now, when we spoke to Bajaj Finance last, along with the quarterly numbers, they were confident of a solid FY23. The guidance was 8 to 9 million customer addition for FY23, AUM growth of 25 to 27%. But that was a couple of months ago. A lot has changed after that. Are you confident that what you've shared with us at the beginning of the year in terms of forward guidance and indication, that is intact?
Well, at this point of time, we continue to see overall reasonably robust numbers on the growth side. What's also important is that our net losses are at historic lows. We are back to pre-COVID levels and even below that, which means the quality of business continues to be good as well. Now, the forecast that we made was keeping in mind the Indian economy growing around 7.5%, 8% or so. We know that this tapers off in the Q3, Q4. That's as per RBI's forecast as well. So a lot will depend on where inflation heads in the coming quarters and where interest rate hikes go. Based on that, if we believe that we need to revise our forecast, we will come back.
The fact that interest rates are moving higher and you also increase interest rates, could there be a challenge in terms of managing NPAs, or we are nowhere close to that challenge?
This will differ from company to company depending on what quality customers you lend to, what income segments they are in, how leveraged they are in. We don't see that as a challenge at this point of time, given our significant focus of lending in the middle class, given our focus on data and our ability to monitor their overall leverage position through credit bureaus and other means. So at this point of time, we don't see that as any significant challenge.
Opportunity subset, Mr. Bajaj, which you referred to, is also centered around data, which means digital and understanding of customer. The fact that your phase 1 of web platform will go live later this year in October 2022, can I say that that would be the transformation period for Bajaj Finserv?
Absolutely. The phase 1 live that should go in the third quarter, and by the first quarter of next year, we have the phase 2 as well, which were a set of additional features that we believed were required to keep us at the forefront of what we are offering. A combination of this really is what makes Bajaj Finance a real fintech, a company that is steeped in the capabilities of a financial services company, but that is also leveraging this digital world, that is leveraging this technology, not just for a frictionless experience for our customers, not just for instant loans for them, but also in the way that our employees interact with customers, with each other, the way that our entire collection effort, our debt management works with a high level of transparency and quality. Our payment system and our payment gateways, which will allow customers to use our services a lot more than they do for loans, for example, or the entire merchant ecosystem that we have built over the last decade and a half, making it easier for them to work with us using specific digital properties or platforms that we have built for them. So what we talk about and the phase 1 of our 3-in-1 platform is what we see is only for the consumer, but there are parallel efforts that are already in place for the entire ecosystem. And we believe the way this works together in a synchronized manner is what gives us that competitive edge.
You know, I've had the pleasure of tracking Bajaj Finance very closely, and I've tracked the numbers, and barring the COVID downturn, the growth for Bajaj Finance has been a robust 25% plus, barring some exceptional quarters because of COVID. So my question is that what point in time do you think law of averages would kick in? Because the base with each passing quarter, since you're growing between 20 to 25%, is also growing higher, which means in less than 3 years, you're actually doubling your base. So to maintain this growth rate might be a mighty challenge.
I think that's a fair point, and it's largely driven not on the consumer product businesses, but a large part of the business that comes from home loans, which is a high quality long-term portfolio. But because that stays on for a long period of time, as you're correctly saying, that's where the AUM sticks and doubles every 3 years or so, 3.5 years at the current pace. We've continued to project in the medium term 20-25% growth. Again, I'm not talking about this current year and its challenges. We'll see if we need to review our forecast in a couple of quarters. But when I talk of medium-term growth, we are still less than 3% of the banking system. And the way the middle class is growing in India, and as I said, the opportunity that we see for the coming decade, the base is going to grow much larger. And that's why our growth in market share will be hopefully on that much larger base. So we are still very enthused with the opportunities that exist. We are conscious of the fact that, as I said, the home loan portfolio does slow us down, but it slows us down for all the right reasons and with the right quality. We're also conscious that competitive activity has increased. And that's where, as a team, we stay focused with what we need to do to stay ahead of the game. The entire digital transformation within a business, which was probably one of the digital leaders anyway in the country. But this additional transformation effort of the last 2.5 years is only so that we can stay ahead and closer to our to our customers, so that hopefully we continue to drive strong growth in the coming years.
As the digital transformation would kick in, can I assume that the ROA trajectory for Bajaj Finance will only improve?
I would not want to talk about ROA or profit, Nikunj, because there are so many different factors. As you know, the ROA is a blended number across multiple lines of businesses. We have businesses like our consumer durable products and electronics, short-term but very high return businesses. We have, I would say, medium return but longer-term businesses, which are our SME products, loan products. And then we have something like home loans, much longer-term, lower ROA, but probably the lowest risk business. Now, depending on how growth occurs across these businesses and the external factors based on which we moderate growth or accelerate in particular segments, the ROA could move around. But if you've looked at over the last 5 or 7 years, we have always talked about a 3.5 to 4% ROA. We're currently a little ahead of that. And I think steady state in the medium term, that is something for us to aspire towards.
Since the mortgage business is the bulk of your business, about 1/3 of the mortgage business, can I say that that's one space where the challenges are also going to increase? Public sector banks are becoming much more aggressive. HDFC Limited and HDFC Banks propose merger, which means that one big bank will also become very competitive in that space. I know that's the anchor part of your book, but is that anchor part of the book now slowing down?
We actually believe, Nikunj, that in the medium term, there is tremendous opportunity in the mortgages space. As HDFC merges with the bank, they actually would not be able to occupy parts of the mortgage business, which as an NBFC they can do today or as an HFC they can do today, because banks are not allowed to lend to parts of the real estate sector. And a good blended return on the mortgage business requires you to participate across that value chain. In addition, we believe that being mortgages, and HDFC Bank is a great quality bank, and I wish them the very best. But the next 4 or 5 years, they will have a set of priorities and challenges post-approvals in this integration. We think that creates a window for many others, including us, to continue to build our housing finance business. In addition, when you look at lending available to HFCs, a large part of that used to be taken away by the premier HFC. With that going away now, that access becomes available to that much more to many others. And with Bajaj Housing Finance being one of the premier players in the market, it again brings that access even closer to us. Of course, this business has to be built thoughtfully. It is something that we've been doing over the last 10 years, originally in Bajaj Finance and now the last 3 or 4 years in Bajaj Housing Finance. And we are very bullish medium term on this business.
We've had a chat on the disruption which is coming from Fintech, and your thoughts were that Bajaj Finance is an NBFC which is trying to become a Fintech, and there are a lot of Fintechs which are trying to become NBFCs. Looks like it's the NBFC which is winning the race, given that how some of the Fintech and startups are feeling the heat of meltdown.
It's actually, it's a mixed result. I think there is a significant amount of innovation, disruption, customer centricity, benefit of digital platforms that many of these fintechs have brought to the market, where otherwise incumbents would have just stayed on doing business their own old way. Some of us have got more digital than others. So we must give credit to many of these fintechs and insurtechs for doing that. But we have to also keep in mind that, like the gold rush, you can get early to the game where you will get value for building a platform, for getting some quick digital access to customers. But unless you can build a profitable business model, you are not going to be able to build a long-term business. And the advantage that many of these fintech startups have is access to venture capital, private equity, and that's a great advantage that they have. It's that capital which allows them to grow, to grab market share. But one has to keep in mind that that capital has to be returned. And in most cases, you either go for additional raises in the private market, or you have to go to the IPO market. But the minute you go to the IPO market, your retail investor, your normal institutional investor expects a profitable return to his or her investment. And that's where many of the current fintechs are facing a challenge. They either don't have an economic business model, or they've not reached a maturity where they can showcase that economic business model. But I believe that there's a significant amount of innovative work that they're doing, and this can help them in other ways, which is in B2B partnerships. For them to tie up with the good quality NBFCs and banks could allow them to coexist. And of course, some of them will get the NBFC equation right as well.
All right, that's the view coming in from Sanjiv Bajaj. The next decade will be India's decade, and they're projecting a 20 to 25% growth in the medium term.